The United States and China have agreed to a temporary truce in their long-running trade war. This significant development came after high-level talks in Geneva, Switzerland. The deal, reached on May 12, 2025, offers a 90-day pause on further tariff escalations. It also includes a rollback of some of the tariffs imposed by both sides in recent months. This truce is a welcome respite for businesses and markets worldwide. The trade war had created uncertainty and volatility, impacting global supply chains and investor confidence. The 90-day pause offers a window of opportunity for negotiators to address the core issues fueling the dispute. The agreement is a recognition by both sides that the trade war was becoming increasingly damaging. The economic costs were mounting and there were no clear winners. However, significant challenges remain and the path to a lasting resolution is far from certain. The coming weeks will be crucial as negotiators try to bridge their differences. The world will be watching closely to see if this truce can pave the way for a more stable and predictable trading relationship between the world's two largest economies. The neutral ground of Geneva provided the backdrop for this pivotal moment in U.S.-China trade relations. The city, known for its role in international diplomacy, hosted U.S. Trade Representative Jamieson Greer and Treasury Secretary Scott Bessent. Representing China were their counterparts in trade and finance. The atmosphere surrounding the talks was reportedly tense but businesslike. Both sides acknowledged the need to find common ground, even as they defended their respective positions. The negotiations, while complex, were ultimately driven by a shared understanding. The trade war was hurting both economies. The choice of Geneva as the venue underscored the global significance of the talks. Switzerland, known for its neutrality, offered a neutral setting for these high-stakes discussions. The symbolism was not lost on observers, who saw the location as a positive sign that both sides were serious about finding a way out of the trade war. The 90-day pause agreed upon in Geneva is a testament to the power of diplomacy. It reflects a willingness to step back from the brink and explore a more cooperative path forward. However, the true test will be whether this truce can be translated into a durable trade agreement. Global financial markets reacted positively to the news of the U.S.-China tariff truce. Stock markets around the world surged, with U.S. stock futures jumping over 2% on the news. Asian and European markets also saw significant gains, reflecting a sense of relief that the trade war might be easing. The positive market reaction highlights the degree to which the trade war had been weighing on investor sentiment. The uncertainty surrounding tariffs and the potential for further escalation had created volatility and dampened investment. The truce, even if temporary, provides a much-needed dose of stability. However, some analysts cautioned against excessive optimism. They pointed out that the underlying trade issues remain unresolved. The 90-day pause merely provides a window for negotiations, not a guarantee of a lasting solution. Despite the cautious notes, the market's response to the truce is a clear indication that a trade war is bad for business. The easing of tensions is seen as a positive development, even if it is just a first step on a long road to resolution. The decision to pursue a tariff truce was driven in part by the growing economic pressure on both the U.S. and China. The trade war, initially seen by some as a negotiating tactic, had begun to inflict real economic pain on both sides. In the U.S., businesses and consumers were feeling the pinch of higher tariffs on Chinese goods. The tariffs had raised prices for consumers and disrupted supply chains for businesses. Certain sectors like manufacturing and agriculture were particularly hard hit. China, too, was facing economic headwinds. The tariffs had impacted Chinese exports to the U.S., its largest trading partner. The trade war also contributed to slowing economic growth in China, raising concerns about job losses and social stability. The economic pain was becoming increasingly difficult to ignore. Businesses on both sides were vocal in their concerns about the impact of the trade war. The truce reflects a recognition by both governments that the economic costs were outweighing any perceived benefits. Section 5. Businesses grapple with uncertainty. While the tariff truce was welcomed by many businesses, it also underscored the uncertainty that has become, well, a hallmark of U.S.-China trade relations. Companies on both sides have had to navigate shifting tariff regimes, making it difficult to plan for the future. Jay Foreman, CEO of Basic Fun, a toy company, expressed relief at the news of the truce. However, he also noted that the remaining 30% tariff on Chinese goods would still impact his company's bottom line. The uncertainty, he said, made it challenging to make long-term investment decisions. Foreman's experience is shared by many businesses that rely on U.S.-China trade. The tariffs have disrupted supply chains, increased costs, and created a climate of uncertainty. While the truce offers some breathing room, businesses are still grappling with the long-term implications of the trade dispute. The uncertainty extends beyond tariffs. The U.S. and China are also competing in areas like technology and innovation. This broader competition is likely to continue, regardless of the outcome of the trade talks. Section 6. China's concessions, a closer look. As part of the agreement, China has reportedly agreed to suspend or remove other retaliatory measures it had imposed since April 2, 2025. These measures included tariffs on U.S. goods and non-tariff barriers, such as increased inspections and delays in customs clearance. While details of these concessions are still emerging, they are likely to target specific sectors that were particularly hard hit by China's retaliatory measures. These could include agricultural products, automobiles, and machinery. The removal or suspension of these barriers could provide some relief to U.S. exporters. However, it's important to note that China's concessions are likely to be contingent on the U.S. upholding its end of the bargain. If the U.S. were to impose new tariffs or take other actions deemed hostile by China, these concessions could be quickly reversed. The specifics of China's concessions and how they are implemented will be key to assessing the overall balance of the deal. A closer look at which products and sectors benefit most from these concessions will provide insights into China's negotiating priorities. Section 7. The road ahead. From truce to treaty. The 90-day tariff truce is just the first step on what promises to be a long and complex road to a comprehensive trade agreement. Negotiators from both sides now face the daunting task of bridging their differences on a range of contentious issues. At the heart of the dispute are U.S. concerns over China's trade practices. These include allegations of intellectual property theft, forced technology transfer, and unfair subsidies to Chinese companies. The U.S. is demanding structural reforms to China's economy to address these concerns. China, for its part, argues that its economic model has been successful and that it is committed to further opening up its economy. However, it is reluctant to make concessions that it perceives as undermining its sovereignty or economic model. Bridging these differences will require significant compromises from both sides. The 90-day truce provides a limited window to see if such compromises are possible. Section 8. The global stakes of a trade war averted, for now. The U.S.-China trade war has had far-reaching consequences, extending well beyond the two countries directly involved. The dispute has created uncertainty in the global economy, disrupted supply chains, and raised fears of a broader economic slowdown. The tariff truce therefore has implications for the entire world. A prolonged trade war between the U.S. and China would have a chilling effect on global trade and investment. It would also undermine the rules-based trading system that has underpinned global prosperity for decades. The truce offers a glimmer of hope that a more damaging scenario can be avoided. However, the underlying tensions between the U.S. and China are unlikely to disappear overnight. The world will be watching closely to see if the two countries can manage their differences constructively. The stakes are high not just for the U.S. and China, but for the entire global economy. The outcome of the trade talks will have a profound impact on the future of global trade and the rules that govern it. Section 9. A new chapter in U.S.-China relations. The tariff truce could potentially mark the beginning of a new chapter in U.S.-China relations. The two countries, despite their rivalry, recognize the need to coexist and cooperate on pressing global challenges. These include climate change, pandemics, and nuclear proliferation. However, a reset in relations will require a fundamental shift in mindset. Both sides need to move away from the zero-sum mentality that has characterized their interactions in recent years. They need to recognize that their interests are not always diametrically opposed and that cooperation can be mutually beneficial. The trade truce, by providing some breathing room, could create an opportunity for dialogue on a wider range of issues. It could pave the way for a more constructive and cooperative relationship, based on mutual respect and a shared commitment to addressing global challenges. Whether this opportunity is seized remains to be seen. The road ahead is uncertain, and the risk of renewed tensions remains real. However, the tariff truce offers a glimmer of hope that a more positive future for US-China relations is possible.